What's good, YouTube? In a little minute, but I wanted to pop up on here and share some trades I took for the month of April and talk about consistency versus inconsistency and everything that I've learned in regards to the two things, because both things can make you a profitable trader, but if you try to do both at the same time, it's just not going to work. You have to pick one. Do you want to be a person who can consistently pull up and get some wins, or do you want to be a high R multiple trader that's a bit inconsistent on a day-to-day approach, but you can still end the month green? There is no, one way is better than the other. There are plenty of people who've made a living doing both things. It's just what I've learned is that you can't have it both ways. And if I could express anything to anybody who's doing, who has found systems that work and they're just not sure on which one to go with, just if you have an account and you want to be consistent in one, and that one is going to be like a layup easy money account, then do that. But just do that in that one account. Don't do it in the same account. If you want to be a high R multiple trader where you're looking for the overall move, or even a trend trader where you're trailing your stock with structure, do that in one account, but do not crossfade things. And also understand that it might not be as capital efficient to be spreading your money in those different ways, depending on how much money you have. If you're balling, then it doesn't really matter. But if you have like a small port and you're trying to grow it, then I would suggest doing the consistent route. So this is my track record for April in this 50K account on Lucid. I ended the month up like only 1K, and while it's a green month, I would rather have passed the entire account in this month. But let me tell you why I didn't pass. It was because I was doing exactly what I told you I was before. If you look at some of these wins, some of them are outliers, like this one win, and then some of them are pretty consistent, just $200 wins, or $200 to $300 wins. So this was 250. This was almost 300. 260, 300, 300. I took two trades. One was a loss, another one was a win, and I think I went for a 2R on this day, so that's why I ended up a little bit green. Or I think I took a smaller loss and had a bigger win. Either way it go, my loss was 8 on this day, and that's why I had a small green day. This was 200, this was 400. Oh, and I took a $400 loss and then made it right back. So to me, obviously your wins are not going to be super consistent, as in like you make the same dollar amount every single day. But the variance here shows that I'm not exactly dialed in when it comes to a consistent amount of money that I'm making with the way that I am trading. To me, so if I could pick a number, right? Let's say I wanted to make $300 every single day on this account. My win should be no more than 350 consistently, unless I'm doing something where I'm like trailing one contract, but that's an entirely different system. So for me, if I'm making like 300, 350, I'm very consistent. My wins will be consistent, but because I have outliers in here, it shows that my targets are changing, and maybe even my asset pair is changing. Like on this day, I was trading ES, and the rest of these are MNQ, I believe, NASDAQ. So it's like, if you really want consistent results, even though I ended the month green, but like you really don't want to be taking these prop accounts and then trading them, wasting time, fucking trying to pass in 2-3 months. Like you really want to pass within a month. Ideally you will want to pass in 2 weeks. Obviously this depends on your bankroll, but if you can really afford it, you should ideally pass within no more than 2 weeks, and then pass your second phase in no more than 2 weeks, and then be funded by the end of the month. You really don't want to be wasting time in these accounts doing this shit. But that's the problem that most traders face. Most traders are not even profitable. But let's talk about the ones who are either at break even or are profitable and they're having struggles with inconsistency. Dial in your system and figure out what you want to do. I feel like I've beaten a dead horse on that. So let's look at some of the trades that I took. Okay, so I post all of my trades inside of my Discord server. Discord free down in the description box below. The link to the indicators that I'm using is also in there. These are the indicators I made myself. But anyways, all I was doing was very simple rotations off of quarter levels. That's how I trade. So if you know me, this is what I do day in, day out. I'm just taking trades off of these levels. One count I'm using limit orders, the other count is raw execution, waiting for the expected value to change. How do I know the expected value changes? When we get a close above the key level. So once we retested it, closed above it, EV has changed, we're most likely going to the next level. The next level could be literally any one of these levels, right? So 26,750 is going to rotate through all these levels to eventually get to what? 27,000. Why is that? Because that's $250 up to the next level, and market did get there. But that's more of a swing trade approach, and I'm just looking for the rotation to one of these levels. In this case, I was just taking the rotation from 750 to 800. One and done. Claim, rinse and repeat. That was on the 21st, so that was this $300 win right here. One and done. So in here, you're also, like I said, going to see some of my crypto trades. And I relatively try to do the exact same thing over there as well. Although it's not always as clean because crypto has leverage and it's volatile and everything else. But it's essentially kind of what I did here in this trade. Can I move it? Yeah. So like I took the rotation off of 1,700. Like what? This is the fucking problem I have with crypto. It's like, what number is this? What number is this? Anyways, I took the rotation off of 17. I was catching momentum. This is you can trade this like a stock. This is my momentum setup here. You saw we had this nice consolidation here. We broke above the high. I got long, and look at that. That was a crazy one. So there's my entry, boom, I got in there, and then I was aggressive with the trail. I took a little profit there. That was way too early, as you can see. I even said, I gotta get better at holding. So I entered here, and then I sized up when it got me confirmation, and then I just started clipping. Then I was all out here once we started to close below the 20 EMA on a 5 minute. So I was clipping into strength, and then I got out. What I could have done better is I could literally have just held my entire position and then close right here. Just one and done that thing. Like enter here, close here. You captured the entire move. At least you captured this leg of the move. I won't say the entire move because this could have pulled back, consolidated, and ripped again, but at least you caught that one leg of the move. So that was one of the crypto trades that I took. Let's look for another one. I think there's a loss on Hyperliquid. Pretty sure I got clapped. I don't know, or maybe I won. There's another crypto trade. Literally trying to what you really want to do is try to do the exact same thing every single day. So this is another one, trending above the VWAP, which is a purple line, trending above all the EMAs, trying to catch momentum. Same thing. It pushed. I did the exact same thing that I did on the first trade. I got in. I'm not sure if I think I might have took some off here. I'm not really sure. Maybe I saw something and I took a little bit off. But yeah, I did the same thing. Just entered and then I started selling into strength. So there's that. So let's see. This was the 22nd. Looks like I had a wide stop on this, so I got long on the retest of 26,850. So I got long on a retest of 26,850. It had a nasty pullback. This was after the open as well. Hold on, I'm about to sneeze. It had a nasty pullback. Cleared the liquidity from the lows. Always map out where liquidity is. I'm telling you, it will save your effing ass, man. Like, this market is vicious, and if you haven't learned by now, if you're getting smacked in the market and the market is just clearing lows and going higher, is because they just wanted to take the liquidity from the lows, and you need to anticipate that with either a entry there, add there, or something there to anticipate that. Like, this is, you got to get this through your head. You honestly do. Like, if you really want to be successful in this trading thing, you have to figure out how not only you are losing, but how everyone in the market is losing. And it's usually through liquidity grabs. And if you just trade liquidity grabs, cool, but you need to understand that they don't always happen. It's just one of the tactics the market makers do to fill orders. It's just the low-hanging fruit. These influencers tell you, oh, the market doesn't need your liquidity. Listen, it's not about whether they need your liquidity or not. It's the fact that the liquidity is sitting there and it's easy money to be taken. So why wouldn't they? Why would it's like taking candy from a baby? I'm telling you, like, don't listen to these influencers who tell you, oh, it's not, they're not doing liquidity grabs. They're probably trading the higher time frame, so they're not getting liquidity grabbed. But if you are trading, you know that they're taking your liquidity. Like, look at this. This is clearly a liquidity grab. Swept the lows, retested the level, and then went higher. I didn't know that was going to happen, but I've been trading long enough that I just anticipated. So I'm like, okay, wider stop. I think my stop loss might have been below 26,800. So I know people will be like, okay, well, where's your stop? So if I got long here, my stop loss was probably below 26,800. And it was probably like the equivalent to a 1-to-1. Let me see. Yeah, so every $50 on NASDAQ is 200 ticks. Excuse me, is 200 ticks. So this was like slightly under a 1-to-1. But, oh, you know what? It wasn't, because I added once we reclaimed the level. So that improved my R multiple. So maybe on this 200 ticks, $100. Yeah, so maybe I think I probably was anticipating this the sweep. In retrospect, I should have added as soon as we swept the low. I should have added down here instead of over here, because the expected value down here is way better than over here as well. Yeah, the expected value, because it's the R multiple plus probability. The probability down here is high. It's low because it's a pullback, but it's high because we swept the low and then we had a pin bar which is an absorption candle. So that's higher probability. So that's good expected value. So I should have added there, and then I probably could have tightened up my stop loss from being down here to right below this low, and then I could have taken profit here. So there's that. Hope y'all enjoying the value that I'm bringing. Can I pull this over? No. This is gonna be a bit annoying because I can't show you this properly. I can see it. I don't know how to God damn it. Anyways, I took buys at 27,000 over on the left. You can't really see it here, and it wanted to draw down over here, and then I exited at 2750. So again, I was really taking low hanging fruit layups. I wasn't trying to swing for the fence there. That was the 23rd, and oh, you know what? I think this is the day I took a loss. Okay, I'm sorry. So I entered at 27,000. I took a loss, and then I re-entered on the reclaim. Let me see if I can take a picture of this. Okay, there we go. So I entered this line right here is 27,000. I enter at 27,000. I got what happened to me? Liquidity grab. Played a fa sound. Fa. I got swept. Took my liquidity. Once we reclaimed 27,000, I re-entered, and they pushed again down to retest this level here. Wide stop, and I exited right at 27.50, and I sized up once we got double confirmation here. So we reclaimed confirmation. I bought again. It went down lower. I waited. You gotta endure the drawdown, man. Drawdown doesn't mean that you're wrong. You gotta get that through your mind. You need to have stops wide enough to just let the market fluctuate, because there is noise and all this other stuff. And if you have, man, I tell you that tight stops do not work. They can work. It really just depends on what you're trading, honestly. You can do tight stops on like maybe like a stock, but on futures, no. Just don't do it to yourself, brother. Or sister, sorry. What else we got? I got some crypto trades in here. Got smoked on some of them. Put me in I had 100% parlay on this one on Boss. Okay. I got clapped on options. Don't worry about that. It looked like I was up. Nope. Got washed. Max loss. This is the max loss day. You see the difference here though? Like, momentum was already to the downside. I bought at 27,200, clapped, and then I bought again at 27,100, clapped again, and then I was done. I was like, okay, I'm catching a falling knife, and I lost $400, and it was over with. And then I took this trade, which is just bread and butter break and retest. Was not swinging for the fence on this one because we're still in the uptrend. I saw we retested it, and I would say this is like, it really depends on how good you can get your entry. My entry was sniper. Like, I think I took a picture of it. So this is my take profit. This is my entry. So I entered right at the level, and this was my take profit. Unbelievable. That this arrow is my take profit. I literally sniped the bottom. So, and you're gonna have trades like that when you set limit orders, but it's not always gonna be like that, you know. Like, the fact that you can do it is cool, you know. Like, it's literally just a break and retest. And that was the $400 win that I had after the $400 loss. Well, like, it's not always gonna be like that. And ideally, if you're using limit orders, you really should be taking like a 2R, because you're taking additional risk without confirmation, and ultimately that's gonna lead you to have a lower win rate. But I mean, I think that was the last trade I took for the month. I was done after that one. And then the market, it completely just ripped through the highs. So when it comes to like being consistent, all the trades, most of the trades I showed you were just me capturing 200 ticks on NASDAQ, which is literally just a $50 move. And the thing is, like, if you can consistently catch a $50 move, you can size up, because then you really nail down how to be consistent in the market, and that becomes your easy money plays for when you trying to swing for the fence on a different account. And I think they both have their strengths, right? Like, if you can consistently in the week green, that's a big deal, because then you can size up, you can run the prop firm accounts. Like, you can do, it opens you up to so much additional opportunities, because now you are actually a consistently profitable trader, versus on a account where you're swinging for the fence. You're going to get that R multiple, but that's inconsistent. And I really do feel strongly that if you swinging for the fence, you should really swing for the fence. Don't go for no 2R, 3R. Like, go for the 5R and plus multiples when you're swinging for the fence on those accounts. That requires you to perhaps trade something that can do that. Stocks, crypto, futures can do that for sure, but not on a day-to-day basis. You most likely gonna have to hold for maybe another day. Like, you can get a 3R out of futures for sure, but you got your entries gotta be stupid good. Like, you really gotta sit there at the chart for a while to get those entries, versus if you traded like literally anything that's like trending above VWAP, trending on the day. No, let me back that up. when you're trying to look for those high R multiples, you have to swing that trade, meaning that you need to find something that's on a higher time frame trend, 1 hour, 4 hour daily. And then you need to hold that. You have to hold that for days, if not weeks, to get that higher R multiple. What I was doing over there on crypto was I was essentially doing the same thing I'm doing on the NASDAQ, which I was literally just looking for momentum and base hits. Although over on NASDAQ, I'm more so focused on the quarter levels, rotations. Over on the crypto, I was looking for momentum, and I was just trying to catch that move, things that are already trending. I'm just catching that momentum, and I'm in and I'm out over there. Same thing over here, but it's just a little bit different. But I think there are benefits to having those two accounts, because on one hand, after you start catching these base hits, what's going to happen in your psychology is that you're going to start to get so good that you're going to see these trades they're going to go flying. You're going to have a really good entry, and it's going to be like a 3-4 R multiple. You're going to be like, damn, I let go of so much. I would have made so much money. No. Stick to base hits and the base hits account. Stick to home runs in a home run account. Don't flip flop on the accounts. If anything, really, if you really want to lock in, you would just do one thing. But I understand trader psychology, and once you get good enough, you can essentially do both, because this home runs they're just trailing. You're just trailing your stop. It's not super like psychologically intense like day trading is. So it's not that difficult. But realistically, if you really want to get consistent, just look for small moves in the market and do that every day. All right. Free Discord in the description box below. Indicators link in the description box below. I'm going to catch y'all on the next one. One love.